And it's time now to continue the conversation. So let's welcome in Bryant VanCronkhite. He's Senior Portfolio Manager of Allspring Global Investments. Bryant, thank you for joining us.
How are you, Dick? Great to see you.
Great to see you as well. Now listen, we're seeing markets higher today, decisively higher, unlike yesterday when they were meandering. But how are you feeling overall as big tech earnings are about to be in full swing right after the bell?
Yeah, the market's transitioning from a very macro-heavy environment the last several weeks where we worried about geopolitical tensions flaring up. We're still worried about the long-term impact of the Fed's rate hiking cycle. And we get to, for a few short weeks here, think about earnings. And the market's excited about that. We're excited about what's going to happen with the big tech names this week. And it's what's going to happen as companies provide updates on the fundamentals. The market's been trading so much on the macro. This is a bit of a reprieve for us as investors to focus on fundamentals for a little bit and begin to navigate this market with some newer, fresher data.
Now that's interesting. I was just going to ask you, what do you think this market has been trading on? So you say it's been focusing mostly on the macro. Are you talking more so about the direction of interest rates?
Direction of interest rates, which is the symptom of a bigger issue, which is maybe the chaos of the fiscal situation in the U.S. government right now. I think the inability to get a speaker elected is actually highlighting some of the inefficiencies, maybe some of the longer term challenges of our budget deficit, which has pushed term premiums higher, pushing the interest rates higher. That's been a big issue for us. But as you play that out over time, we're going to see that start to roll into company fundamentals. There's a very big debt wall that's coming up in the future, a lot of maturities of current debt that needs to be rolled into higher interest rates. So I worry about the macro impact of higher rates on the level of equity valuations overall, but I really worry about the microeconomic issue as these higher rates roll into the cash flow dynamics of a lot of companies.
That's an interesting note. Now, when we think about the current environment that we're in right now, what kind of areas should investors be looking at?
Well, I think first and foremost, we want to focus on balance sheets today. We're going into a lot of uncertainty economically, geopolitically, et cetera. And whenever there's uncertainty, you want to turn to your balance sheet to be that fortress for you. So which companies provide a fortress-like balance sheet that will protect you and protect your capital? But then over time, as we go through the cycle, we can flip that balance sheet to being the driver of our future as well. How is a company going to use that capital to buy additional assets through M&A, invest in organic growth through R&D or CapEx, which I'm sure we're going to hear a lot about from the mega cap tech companies in a few minutes, maybe buying back their own stock. So the first place of focus will be balance sheets for me. Mm-hmm. Now, as you dive deeper, I really like healthcare and I like staples today. I think those areas have been beat up for some bit broader reasons that are creating some really unique stock picking opportunities right now.
Okay, now let's talk those mega cap tech stocks. Alphabet, Microsoft, those are the two biggest names set to report after the bell. Now, what are you expecting first from Google?
I think Alphabet's going to come out and talk about the resiliency of their advertising platform, right? The ability to continue to command market share growth from their search platform, the ability to expand that and demonstrate high ROIs to their client base, and the investments they're making in AI that will help drive market share through the cycle. I think beyond that, I want to focus on their CapEx and their expense plans. Are they going to be elevating expenses to invest in AI to continue to drive their organic growth higher? And will that expense outlay be too significant and worry investors? I don't think it will be. I think they have a lot of room to continue to invest without concerning investors, but I'm focused on that this particular quarter. Longer term, though, I think they have a really unique competitive advantage that's going to drive incredible value creation for investors.
What other areas of the business might you see a potential slowdown?
I think the slowdown that we could see within Alphabet is really around the ad spend. This is the key concern, right? They are a cyclical business in terms of being exposed to advertising. And advertising is notoriously cyclical. As the economy slows, people pull back on their spend. But the reality is, I think they're going to take share through that. I think advertisers are constantly looking for higher and more confident ROIs. And the visibility of your ROI can be very challenging under traditional media. But what Alphabet's doing, what Meta provides, I think you can measure your ROIs with greater certainty. And as a result, when people step back and say, I need to cut my ad spend by 15, 20, 30%, given where we're going within the economy, they're not going to turn to Alphabet. They're not going to turn to their search engine optimization and their search spend. They're going to turn to more traditional, more legacy media that I think will ultimately bear the burden of those ad spending cuts.
Now, similar to Alphabet, I'm sure we could expect to hear more about AI within Microsoft's earnings, yes?
Absolutely. I think everyone wants to know where we are with AI, with Microsoft as well, and certainly they'll talk about that. We think that business has incredibly resilient cash flow streams. As much as people focus on the potentially economic sensitivity of the Alphabet cash flow stream, Microsoft, I think, has an incredibly resilient cash flow stream that will endure any recession that we think might be coming in the near future. Now, they're going to reinvest that back into AI to continue to try and drive share growth over time. We're going to see them invest that in the cloud platform to try to drive market share there as well. But Microsoft, to me, is going to demonstrate that they have a resilient cash flow stream without much cyclicality for us to be fearful of.
All right, we'll have to leave it there. Bryant VanCronkhite, Allspring Global Investments, thank you so much for coming on Market on Close.